I'm Sandeep, Raina. Today we are going to speak about a stock called SRF. Now this is mostly a sectorial call and then also a stock call. Now why it's a sectorial call? The company is into chemicals, they are into fluorine chemistry, and they are also into gas and also a small business of polyfilms. Now the interesting part is majority of its revenues / valuation comes from the chemical business. Now interesting part is if I just get into history of 5-7 years, and barring the last 1.5-2 years, chemical industry has done very well. In fact, this SRF if I just go back 5 years back, would have at least gone up 4 to 5 times. And the reason was very simple: the companies were doing very well. In fact, most of the chemical companies were doing very well. At the same time, the margins were improving. We are taking market share from China, and still we are doing that. But from the nascent stage, which was in 7-8 years back or even more, most of these companies became very big. In fact, SRF, if I just go back 10 years back, it was few thousand crores, maybe 4,000 to 5,000 crores, and it actually is today at 68,000 crores. So that is the kind of growth the company has seen, and this is with all this sectors, all the companies in this sector, and most of them have become big. And the thought process was very simple: they worked on the chemistry, they worked on their processes, and they became very big. And of course, the products were being used globally. We exported very well. Just to give us the thought process that in chemical market we are still 1/10 of Chinese market. So that is the kind of scope that we had or we have. But of course, when we saw such a big boom and there was such a big run that happened in the industry, in chemical industry, valuations went out of whack. And of course, it's very difficult to sustain those kind of growth numbers. And of course, valuations became expensive. So from last 1.5 years, we saw that the sector has not done well. Now, standing today, I think, and that's what we believe in, we are close to the bottom. And this is most for most of the sector, and rightly for the SRF also. If I just talk specific about SRF, I think the refrigerant gases, which is a business, I think they should start doing very well, because I think the demand for compressors and all that will increase because there's a lot of demand for that. In fact, the prices of refrigerant, I was just reading an article, has increased with 30-35% in some Chinese market, although still not seen in Indian market, but somewhere it should come going forward. That is one. Second, most important, see, for any industry, for manufacturing setup, it's very important we continue with the capex irrespective of the market doing well or not. And that's the best part about SRF, because they had huge amount of cash flows. In fact, in next 3 years, we are likely to make around 7,500 crores of cash flow, and the capex the company is doing broadly around 2,000 crores every year, and they'll continue to do that for next 3 years also. That is the kind of growth that we'll see in the capex. So just to give a perspective, they're adding every year around 20-25% of incremental capex vis-a-vis their plant and machine. So that tells you every 4 years they double their capacity, and that is what we will see going forward when they actually reap those benefits. With the sweating of these assets will happen, and that makes this story very interesting. Is one of the largest player in chemicals in India, are doing very well, very good in terms of technology, in terms of know-how, and that's how I think that will do very well. Just to give a perspective, so the companies make good amount of cash flows, as I discussed just before. In next 3 years, there are around 700,000 crores of cash flow they will make, and mostly internally accruals will fund these kind of assets. There's no problem with the working capital. Working capital is fine. So this is a typical company which I think should do well. Reason being, the industry would be coming in favor. The industry was not in favor in last 1.5 years, but the company has made capability, which we saw in last 10 years, barring the last 1.5-2 years. So this is a very good company that should have in a portfolio. I don't think so from this price, which is around 2,200, 2,250, there will be a lot amount of disappointment. In fact, from here on, I think we can make good 10, in fact 15 odd %. So the target for us is closer to 2,700 rupees from here on, and it's a must-have portfolio, and it's a typical portfolio stock which will give you good compounding with very minimal kind of drawdowns. which makes it very, very attractive. Thank you very much.